the key here is that saying of, does a rising tide lift all boats? And in the context of retail, the answer is no. Just because some retailers are seeing positive growth and seeing consumers come back to them, it doesn't mean that's going to be the case for every single retailer. It's really about which retailers can resonate with consumers during these times where they still feel extremely cost conscious.
Melissa, that is an important point, the nuances here that we're seeing in the sector and what it spells for the economic cycle, because we've had a market that had a wobble last week of concerns of recession. What we're seeing in the numbers today doesn't suggest we're right on the cusp of a recession, though, does it?
No, it definitely doesn't. And I think, the dialogue has been going back and forth and teetering and saying, maybe we are, maybe we aren't. But the reality is, I do think we've missed it, which is great. I think the key is just how consumers feel versus how they're spending. They will tell you that they feel like they're in a recession, but their spending doesn't necessarily reflect that. They're still spending where they want to spend. So I think we're safe because consumers are still spending despite how they feel.
Melissa, good morning to you. I mean, what do you think is keeping spending up in some areas of this market? And I mean, I know you just made note of how they're spending where they want to spend, but what is keeping the consumer spending in those areas? I mean, a lot of the buffers have certainly been done away with, whether it be the high pandemic savings, credit cards being maxed out. It just feels like perhaps labor is the only thing keeping markets or spending alive. Is that the case?
I think a big part of it is just retailers have been able to offer promotions. And they weren't really able to do that the past couple of years because their demand forecasting was in crisis and because of the pandemic and, manufacturing issues. So this year, retailers have been able to offer the correct discounts on the items that consumers actually want. And consumers are hyper reactive to those discounts because they're so cost conscious. So they're spending more because they want to be saving more.
Yeah. Well, I mean, if that's the case, then why has McDonald's not been able to make it? Why has Starbucks not been able to, I suppose, take advantage of those discounts? Because both of those also incurred discounts, but not necessarily being able to thrive on the back of their earnings picture.
Yeah, I think there's a couple reasons for that. One, that's in the QSR, the food space, and consumers can be really strategic there and say, I'll actually eat at home. I'll go grocery shopping instead. So there are financial alternatives that feel more savvy and more cost conscious, even when those retailers or those brands and restaurants are able to push promotions. And the other aspect is, I think, particularly for brands like McDonald's that are already operating at kind of a discount positioning for consumers, they may be less sensitive and less reactive to those promotions because they're already kind of table stakes and expected for those brands. Where they've been really excited is maybe from some of the retailers and brands that weren't previously offering such impressive discounts, or in the case of Walmart, where they just know they can consistently get the lowest prices in contrast to the alternatives. But there are alternatives to QSR, which is, cooking at home.
Melissa, it's certainly nice to see the consumer win for a change after what seems to be a series of price gouging events in some areas. But when it comes to the promotions, what does it mean in terms of profitability? Because for me, when I look at some of the good side, the promotions sort of take into account the increases we had on inflation. That's come off. You've had the discounts that really taken us back to levels that we had before some of the price escalation. So this must take a hit to margins that you're seeing at some of the goods companies, but even to some of the restaurants that are now getting promotional in the activity.
Yeah, that's a great point. I mean, I do get excited, like you said, when the consumer kind of wins here. And I actually do think that retailers win when consumers win. And that's just because they're able to drive more volume. So what they maybe, lose in price, they do make up for with that volume, especially because consumers have this mindset now where they'll spend more to save more. So they'll kind of load up that basket, make it larger, which kind of compensates and rewards the retailer for giving them some savings back too.
Melissa, you've also had a change in leadership at some of these brands, haven't you? I mean, Chipotle, that is a significant move to Starbucks, of course, then that we have seen there. How does that change things along? And of course, even Victoria's Secret new CEO, does that change things along at all?
Yeah, I definitely think it will. I hope it will. I think that's, a lot of times the goal when you do a change up like that is to create change throughout the organization. I'm especially excited about the Victoria's Secret change up just because I do think that that brand has a lot of potential. And I think it could have a similar comeback story to some of the other retailers that have been kind of alongside of it, like the Abercrombies or the Gaps that are really, previously popular with millennials and have that kind of nostalgic brand heritage and also have some timeless product and ability to resonate with consumers when they really put their minds to it. So I think and I hope, this is some retailers and brands taking advantage of this crucial inflection point and understanding that, going back to that analogy, if they want this tide to raise their boat, they have to kind of, change the materials a little bit.